Good morning, everyone, and thank you very much for joining me. This is the morning market review. It's Tuesday. It is the 4th of July. And my name is Russell Shaw. I'm a senior market specialist at FXCM. And my email address, if you need to contact me, please send your email to rshaw@fxcm.com. Just going to go ahead, bring up our disclaimers. I'll keep this on screen for a few moments. Now, just to remind everyone, today is the 4th of July, Independence Day holiday in the US. Already yesterday, the markets only had a half day, so there was liquidity that was affected. Certainly going to be lower liquidity today. Just be aware of that there is a public holiday in the US. All right, let's bring up the market commentaries disclaimer. Good morning, Mateus. Howard, good morning to you as well. Thank you very much for joining this morning. Very much appreciated. Our references, market scope and trading view. Because it's going to be a lighter day, it's going to be, I think, a challenging day, just because I'm not sure we'll get the volatility that we need. When we took a look at the US dollar yesterday, and this was an instrument that we sort of emphasizing the analysis of at the moment, and that's because it's getting pretty close to the I guess the point of the or the apex of the symmetrical triangle. Very much moving sideways at the moment. Last week I was looking for a reference candle reversal, and a reference candle reversal did not really take place. In fact, we had a week of uncertainty. I just want to show everybody again what we mean by a reference candle. Just I think because that we have a slower day today, it's probably a good time to take an opportunity to just highlight some theory. So I'm just going to bring up Microsoft Paint, and I just want to go through this with you guys. Now, you know that prices don't move in a straight line. They'll tend to zig and zag, won't they? Kind of make these peaks and troughs as they progress. And what we are effectively looking for in terms of reference candles, we're looking for turning points. Okay, that's now the nice thing, the really awesome thing about reference candles is they're always present at turning points. They're always going to be present at turning points. The problem is that they don't always lead into turning points, so they can be tricky. But let's just move to this side, and we'll just draw. So we've got the same pattern on the left and the right. You can see that I've drawn a downtrend over here. So here's the downtrend, okay? And effectively, what we're trying to do is we're trying to catch the rally in a downtrend. So here's the rally. So if we can identify where the rally is in the downtrend, then that's probably an area we can target. So we're talking about this area here, aren't we? Okay. So now take a look at the pattern. The pattern is you've got a candle that's got the highest high in at least 3 candles, okay? And then the candle to the right moves below the reference candle's low. And then we actually need a third condition. We need it to close. Okay, we need it to close below that but below that reference candle's low. Once we got that, there's the swing. There's the swing. Okay, so that's what we mean by a reference candle. This would be a bearish reference candle. Let's just take a look at this in terms of a bullish reference candle. So what we could do is let's take this out and let's take this out. Okay, let's draw in, let's make this black, the individual candles or the bars. Okay, let's do one more. Okay, can you see the reference candle there? Okay, and what have we got here? It's something that looks like this. Okay, and we've got a uptrend. Okay. And here's the uptrend. And what are we trying to target? Well, in an uptrend, we're trying to target the dips in the uptrend. So here's the dip. Here's the dip. Can you see the reference candle there? So what have we got here? We've got the candle that's got the lowest low in at least the 3 candles. And then the candle, sorry, let me redo that. The candle on its right side is taking out the reference candle's high. And then we just want it to close above the reference candle's high as well, right? So that's effectively what we are looking at in terms of reference candles. So now let's take a look at this in terms of an actual. So let's go over here. Let's go to Euro US dollar. Okay. So what we're looking for here is the reference candle right there, right? And you can see that's the candle that's got the lowest low. And then the candle to the right of it doesn't meet condition 2 or 3. What's condition 2, 3? Taking out the reference candle's high, closing above it, but the 4th candle does. So that completes the reference candle there. So you can see there's the start of a potential swing. Now it doesn't have to lead into the swing. If it was that easy, we'd all be much sort of more comfortable with the reference candles. The reference candle can fail and it could come back down. But if there is going to be a swing, it has to be a reference candle. Okay, if there is a swing, has to be a reference candle. And you can see that's what we're looking for. Now we go back to the US dollar. And last week we were looking for the reference candle. Okay. So there's the lowest low. This candle here is actually inside of the reference candle's range. But then last week we had condition 2. It took out the reference candle's high, but it just didn't close as comfortably above it as we would have liked. So we're still within the symmetrical triangle here. So the symmetrical triangle here is making life tough for us as traders because we're moving sideways. It's invariably easier to trade trends than to trade sideways patterns, and we're in a sideways pattern here. And it's not that we're in a sideways pattern here, we're in the first instrument that we analyze, the dollar, because the dollar's trend tends to filter out to other instruments. So the fact that the dollar is got a symmetrical triangle, that's really interesting. And then if you take a look at the RSI, it's just chopping around 50. So 50 is neutral. Well, the chop around 50 is just highlighting the fact that we're moving in that sideways direction. So what we can do is we can add in a 30-week moving average here just to help us gauge some sort of direction. So let's just go in and bring in a 30-week moving average. And the 30-week moving average comes from Stan Weinstein's book. I think it's called How to Profit in a Bull and a Bear Market, something to that extent. It's an old book, was written in 1987, but in my opinion, it stood the test of time. Still a really good book. So we're going to bring in an exponential moving average here, and we're going to make this a 30. And we'll make it a 2, okay, line with 2, so a little bit thicker. And you can see that price is now on that 30-week. And what we want to see is if price can get above that 30-week and start pulling the 30-week up with it. Invariably, just a secondary type of tracking mechanism to see if we get some sort of trend. Why would we use a moving average? Because a moving average is a trend following indicator. The fact that we're not trending, well, you can see that we just have a ton of whipsaws here. Crosses above, crosses below, crosses above, crosses below, crosses above. But because we're getting pretty close to the apex of the triangle, I just want to see if we get some sort of lift off here, some sort of movement up here on the greenback. And well, we can't use the reference candle because it hasn't charted. So let's maybe just let's defer to a moving average and see if the moving average perhaps gives us the information that we need. Now, what's interesting is we're getting a ton of data coming out after Independence Day. So tomorrow we're going to get the FOMC minutes, and I think there's going to be some hawkishness, and I wonder if that's going to support the greenback. Then on Friday we've got non-farm payrolls. And that reminds me, on Friday, we're going to do a live trade, a non-farm payroll. So I'm just going to put in the link to that live non-farm payroll trade. It's in the chat. So if you'd like to join us for that, just click on that, and you're most certainly welcome to attend. All right, so the fact that the dollar moving sideways, I think making the markets a lot tougher than when the dollar is trending. Let's just take a look at euro again. And remember, we're going to have a thinner market today because of the Independence Day. And you can see that, let's take these out. You can see that this is a weekly chart. Yesterday's candle on the euro US dollar, it's just a small doji. There's no volatility there. Well, that's a symptom of, what is a symptom? It's a sign of the lower liquidity. Go through to the US dollar again, and you can see we've got a very small candle, the little doji, small little doji. It's a sign of the low liquidity. Let's go through to cable, and you can see just nothing really happening in this week's candle. Not yet, because, well, again, there's that lower liquidity. So what we've spoken about today is that the dollar is moving sideways. That makes life difficult for us. And then the fact that we've got the Independence Day holiday, low liquidity, that's going to make life difficult for us. All right, so let's see if the DAX is has any sort of pattern to it. So let's go through to the DAX. Okay, again, looking at the weekly chart here, what we were looking for is to see if we got a reference candle reversal over here. At the moment, we don't, right? It hasn't even moved higher. When I say it, this week's candle hasn't moved higher than last week's candle. Again, I think there's liquidity issues. DAX moving sideways, going to make life quite difficult for us. Let's go through to the daily chart, just see what's happening here. It's in no man's land. Okay, so it's in neutral. So again, just this sideways movement, this theme of the sideways movement, the fact that there's probably going to be lower liquidity today. Well, the fact is that DAX is in zone 2, not particularly comfortable. We're not seeing any bias to the upside or any bias to the downside. So today is a day I think that you've got to just be just patient, see if there is anything that materializes. The chances of some sort of swing, I think, is remote, given the fact that there is that lower liquidity. Let's take a look at one more, and then we'll conclude. Let's just take a look at gold. All right, so this is interesting. Gold pushing a big button. Gold, we've just got. I'm going to change this to peak trough. We don't have any higher peaks or lower troughs. I'm just going to change. This is the labeling. So we haven't got any peaks and troughs yet to determine trend. You can see yesterday, gold is what we get here is a long-legged sort of spinning top. Bulls try to take price up, bears try to take price down. Effectively closes flat on the day, but we back into neutral. Okay, so even the gold price showing some signs of just sideways movement. So let's just keep an eye on the R1 pivot here. I think if there is a reaction today, it may be at this R1 pivot, which does have an overlap of resistance with the R1. If it hits at R1, what we want to see is the trend following indicators push down. We would also need to see the stochastic push down. However, okay, don't make any sort of predictions. Just keep an eye on this resistance level and see if that is a key reaction level. Okay, that's as far as we'll go this morning. It's going to be a quiet day on the markets today. If there's any questions, go ahead and type those in. Any questions, go ahead, type those in. Mia, did you get a phone call from the services rep? I just want to double check. They did tell me they're going to call you. Okay, cool. Alrighty, let's wrap up here, guys. Thanks very much. Have a good day, good evening ahead. We'll chat again tomorrow. It should pick up tomorrow. We'll also do a crypto minute tomorrow morning. Thanks very much, guys. Cheers.